Good evening. This is Ken Long from Tortoise Capital Management. We want to take a look at a stock that we've been highlighting for the last couple nights, UNH, United Health Group. This was the night of August 6th, 2009. Now, 2 days ago, we identified it as a 5-day down pattern, meaning it was 1, 2, 3, 4, 5 days down. And we framed that trade. It didn't fire the next day because it kept selling off. So yesterday we framed this as a 6-day down. And to just refresh your memory, the vertical blue line is when we were interested in it, and when it first hit the 5-day down pattern, we framed the blue box to find the low to high range to make sure we were on the right side of value. We framed it with a mechanical entry around 27, initial stop at 26, potential retest at 29. That gave us our 2-to-1. We said if we saw tactical momentum in this 26.4 range or so, and it was moving up strong with market strength towards 27, we might buy half of our position there and then put the remainder on at 27, and thus getting an improvement in our average entry price. In fact, that didn't happen. What we saw in the market today was this final, this last candle of selling, where it went considerably below the 50-day moving average, then fought its way back up to 26. So what we have now essentially is a 7-day down pattern. Now we're willing to keep bracketing our entries on this rascal all the way down to about 10 days down, at which point something else is going on and the normal rules of engagement no longer apply. So 7 days down, we will frame this in the usual way then, here and here. Put our stop a nickel below. Mechanical entry would be about here. Retest here. And I'm willing even to say 27.5 now. Maybe 28. Yeah. And this was the day that it first came to our attention. 1, 2, 3, 4, 5. So now we're 2 days into it. And I'm willing to buy on some tactical momentum around that 26.3 range once more. You can see now here that on a Williams percent R10 basis, it's now oversold. And the last time we saw that it was oversold, we saw this kind of move from here all the way up to here before it became overbought. So when it gets into oversold conditions, excuse me, that's always an area of interest, a low risk value opportunity. So that's what the 7-day down frame looks like. Now, inside the chat room, we did some additional work on an intraday basis because there's some opportunities inside the daily trade that offers some potential. And this is what we looked at. So this goes a little bit deeper. This is now UNH on a 5-minute charts over the last 3 days. So today, yesterday, and the day before. Now, some things that came out immediately to our attention looking at this time frame. At the opening of each day, we saw an initial surge up. I think these are people that are looking to buy value on dips. So this would have been 4-day down, 5-day down, and 6-day down. And it started off each day strong and then sold off hard. And then in the yellow areas, what I've identified as areas intraday where it looks like all that hope and optimism has failed. We got some sideways movement, and then the real scavengers come in, the value hunters, who play a 1-day move to get a rebound during the day. So the green is optimism, yellow is despair by the optimist, at which point scavengers come in, and they actually get a nice move. So at the start of each day, hope fails. Hope fails. Fails again. Big hope, big fail, nice move, stabilizes, up, fails again, and now we got a nice powerful close. Now if you connect the highs of each of these surges and take a look at the slope connecting the high points, you see steep, not so steep, and not so steep once more. And in fact, the last surge into the close, what you see was no sell-off at all. And in fact, this is an indication to me that intraday, the scavengers or the value seekers are getting a little bit stronger. And there's some real possibilities now that this thing around its 7-day down period may actually have some legs in the days ahead. Another way to look at this, now we're over to a daily basis, we can see 2 weeks ago it was in a consolidation band, and then we saw a period of optimism all the way up here to almost 30, and then just as much optimism as there was this much pessimism. That's our 7 days down. Equal measures of joy and pain. Came back and tested the congestion area, and now if we use that as a support level for this last 2-week period, and it holds here, we now have the ability to play a 1/3, 1/2, 2/3, 100% retracement, and now we can establish a very nice reward to risk ratio. So if we can buy somewhere south of 26.5 with tactical momentum, we have every reason to believe that we have some powerful moves ahead. Another way to look at that same frame is to say on the 5-minute basis, again, if this is something like a regression line connecting all those dots, and this channel forms the normal up and lower limits of each of those surges, you can now take a look at the context of the close of today as some indication that there might be something ahead. And so you can take a look at that and add this frame to it, and now say, let me find first the area that I'm interested really in stalking it. I have this double bottom right around here and then a nice move into the close. So if I take this as my stalking point, I can then say support level, potential support level, and now I can start looking at resistance levels and with the purple lines and treating each one of these now as a potential target for retracements. And now based on where I see it open tomorrow and where it finds support and then starts to go north, I can pick one of these red lines as a near-term support level. Then I can pick a purple line, and I like 26.5 and 27, as profit retracements. And now I can look to see how I can frame a 2-to-1 reward to risk ratio. Based on the size of these 5-minute candles, it looks to me like you could manage a 10-cent initial stop, which allows you, as long as you can see a purple line that's 20 to 30 cents north of you, if you can manage a 10-cent stop, you have a 2-to-1 with an initial position, which you can then leverage and keep adding to. And now UNH to me looks like a low-risk opportunity, and one that we'll be tracking very closely tomorrow. So that's a quick look now, a little deeper on an intraday basis. On a daily basis, we're back to the mechanical frame that we saw before. Anytime I can buy tactical momentum below 26.5, that's going to be good. And even if I was as wide a stop as $1, I can still get 2-to-1 by targeting 28 on the daily basis. But again, if you can manage intraday a 10-cent trailing stop, your position size can either be 10 times larger or the initial capital at risk could be 10 times smaller and still achieve the same rewards. So, thanks for your attention and good night.